So you want to be a Forex trader. Hey everyone, this is Joshua Martinez from Market Traders Institute. Welcome to video number 6. In our video 5, we went ahead and we drew out the concepts of hand-drawn trend lines, outer, long-term, inner trend lines, what they do, so you get more of a visual view. What we're going to do now is we're going to jump into the live market. I'm going to demonstrate on the US dollar against the Swiss franc. I'm going to show you how to identify your long-term, your outer, and your inner trend line. I'm going to show you some examples of what happens when they break and how you could potentially trade them. Thanks so much, and let's go ahead and jump in. Okay, so in front of us is the US dollar Swiss franc 4-hour time frame, and what I want to do is show you how we identify the long-term, outer, and inner trend lines. So the very first thing that you need to do is you need to be able to accurately just look at the chart and be like, hey, is it going up or is it going down? Clearly the market's going up. You can see that the candlesticks are much higher from where it started, and we have a nice left to right progression upward. What we really care most about is we care most about finding the lowest point of the trend and finding the highest point of the trend, because that's what's going to connect all the pieces together. And so what we want to do, and if that means that you have to back up your charts, like for example, you can move forward, you can see here there's going to be candlesticks in front. Do yourself a favor and literally, like for example, this is the live market here. Do yourself a favor and literally back up your charts to where only the highest point of the trend shows, because this way you can kind of avoid putting bad trend lines on. It's the fastest, easiest, and simplest way to avoid that. Anyways, so you have the lowest point of the trend marked, you have the highest point of the trend marked, and what we're going to do is simply look at this like an upside down picnic table, right? You have these candlesticks are going to be the legs of the candles of the table, and then your trend line is going to be the tabletop. If the legs punch through the tabletop, well, then you have a bad table. So for example, we do not want any candlesticks penetrating the trend line whatsoever. So we're going to find and left click and hold on the lowest point of the candlesticks, and we're simply just going to, let's go ahead and we're going to utilize this low. We're simply going to bring from left to right and raise it up until bingo. You see this? You see how market 1, 2, 3 times the market hits that low. The reason why I did not use this low is simply because it is considered a double bottom, a low and a low, more of a flat level of support. So this is the low that started to take the market up. Now you can see clearly that when the market touched this low, 1, 2, 3 separate occasions, the market went up. So that's important to see that your trend line angle is what the market is using. That is considered your long-term trend line, which basically means that this is the trend that started all the way back in April 2015, and today we're in February 2016. Now, where you bring in your next trend line is when you last touched your long-term trend line. So the last time it touched, just continue the same process. Put the tabletop on the legs and do not allow it to penetrate, and when it touches, bingo, that's done. So this is your outer trend line, or we'll just call it OT, your OT line, outer trend line. And then we have the inner trend line, and the inner trend line is going to be exactly the same process, and you continue to repeat itself over and over and over again until you are done. Now sometimes we'll call this inner IT, inner trend line. Now sometimes you're going to have multiple trend lines. You're going to have like 3, 4, 5, 6 trend lines. That's completely fine. The biggest thing to understand is that when your trend lines are broken, they usually gravitate towards the outer or the next trend line. Okay, and so what this basically means is the market was making higher highs and higher lows much faster, so we have our inner trend line. When the inner trend line breaks right here, let me go ahead and zoom in, you should see the inner trend line starting to break there. That is a clear signal of saying for you as an investor, hey, you know, Mr. Trader, Mrs. Trader, look at me, start looking for potential reversals, selling opportunities, counter trend line breaks on the way down, down A, B, C, D swings, bearish opportunities, and you can clearly see the market is gravitating towards the outer trend line. Now, once the market touches the outer trend line, that is where you as an investor are going to look to take profit. from your sell high point. Now again, in the Forex market, you can sell high first and then buy low second, just like you can buy low first and sell high second. The big thing is just making sure you buy low and sell high, or sell high then buy low. Don't do the opposite. And so let's keep going as the market moves naturally. You begin to see a little retest, and the market, boom, right there. So now the market has touched the outer trend line. Now look at the natural hesitation. You have support, support, support. The natural hesitation of your outer trend line is holding. Now here, you and I as traders, we're going to say, hey, let's look for the buying opportunity. Let's look for the reversal. We sold high, we're now looking to buy low. If we try to buy this market and it doesn't work and it breaks the uptrend line, we want to look to sell, because hey, we broke the inner trend line, we're going to move towards the outer trend line, break the outer trend line, move towards the long term. So you try to sell and you go, oh wow, the market broke below, we're done. No more buying. Let's instead we'll chop that up as a low loss. Let's look to sell this market bearish to the long-term trend line. And if we take a look to see where we're at, this is where we are. So this is the live market, and you can clearly see the US dollar Swiss franc 4-hour time frame broke the inner trend line, moved towards the outer trend line in a wave, lower lows, lower highs, lower lows. Broke the outer trend line, is moving towards the long-term trend line in a wave. So in theory, if you really think about this, you bring in a counter trend line break towards the south, and if the market can break and close below that counter trend line, then by all means we have our next little selling opportunity. Bearish right there. Go ahead and do me a favor, let me know if you want to learn about counter trend line breaks in the next video. We can do that for video 7. This is Josh Martinez with Market Traders Institute. Keep in mind, long-term outer inner trend lines do a few things that tell you market direction, market speed, and the next trading opportunity. You can follow me on Twitter or on Facebook, www.facebook.com/FXPathfinder. You can find me on YouTube. You can find me in the Blabs, and you can also find me at my home here at Market Traders Institute as MTI's Director of Client Success. Thank you so much, everyone. And on that note, every day, help traders find a way. This is Joshua Martinez out.